This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, July 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here had September corn up a penny and a quarter at 4.24. August soybeans were up 7 3/4 at 11.41, and September Chicago wheat was up 2 1/4 at 6.02 1/4. No export sales announcements here this morning. We did get weekly sales. I'd say overall average for corn, 732,100 on the old crop, 767,800 on the new crop. Both were in line with estimates. Different story on the bean side. Pretty disappointing. 41,800 for old crop. The low end of the range was looking for 300, and on the new crop side, 182,500, sharply below the low end of the range there as well. Wheat was on right at the low end of the range, 300,100 for wheat. On the meal side, solid, 239,100 on the old crop, 174,500 on new crop. For bean oil, cancellations of 1,500 on the old crop, and nothing sold for new crop. Good morning, fellas. We are going to wrap the week here. Markets will be closed tomorrow in observance of the Independence Day holiday. So no markets there. We'll reopen on Monday. But I guess kind of highlights this morning, weak bean sales, weather pretty warm and dry in most areas throughout the northern Corn Belt, although there is a system moving through the upper Midwest here this morning up through northern parts of Iowa into Wisconsin there. So, Dustin, maybe share a few thoughts to wrap the week, and then we'll throw around the room.
Sorry, I was trying to look for the mute button. Yeah, so weather does look like it got a little bit cooler for that, 1 to 7 day overnight. So the forecast looks pretty good. I mean, we've got adequate rainfall, still above normal temps, but coming off the highs a little bit. And yet we're still rebounding here. I think the market, first notice day is a time frame where you tend to push a lot of those sellers that would have been holding the position, into a time frame, short window where they all have to kind of make those decisions together. I think that was part of the sell-off that we've had, and we're getting a little bit of that natural bounce back that we'd get from that. The stocks number really helps. Like we said yesterday, I think that the disappearance shows that we do have all this extra demand. You go back a year ago, we're about to go into, the July WASDE report here on next Friday. So you go back a year ago and you look at the July WASDE report for, 2025-26 crop year, and demand was about over a billion bushels less projected in that report than what we're likely to finish out to be this year. So we even though we found all these extra acres and we grew the biggest crop we've ever grown by a long shot, we also were able to see that demand uptick to meet that extra supply. And I think that's very important. The difference between last year and this year is that we actually are coming from a stronger point. Last year we were still negotiating with China. China was not expected to buy much because they were not following through with phase one deal by then. And it was apparent we've already moved on to past that and say we're going to go back to the negotiating table with China again. That deal didn't get done until October, so it took a long time, and it was kind of the 11th hour past their peak buying window. And it really wasn't a huge requirement for old crop when they did do it. Only 12 million metric tons of beans. That's it. So we've got all that demand despite not having China in there for any corn and very little beans. We've been able to actually see a pretty good market against record production from the prior year. So that's where, I put some charts in. Like I think a lot of people are looking at that that last 3 years of what's happened for corn. Like, okay, we're just going to go down into August because that's the MO of the market. And it very well could be the case that we get this next 2 weeks of favorable weather and crops continue to look good, and then the next 2 weeks are also good, and we do go down. It's very, very possible that we get above trend line yield and prices go down. I just don't think that that's necessarily written in stone. I would put yield at trend line estimate right now. And I would also say there's still that chance for a 2 to 3% move on either side of that trend line. A 3% move below trend line yields puts us well within range of pipeline carryout if China is buying corn. And I think that the market is not really, I mean, look at the spreads. The spreads are quite wide east of July, for example. For this year, we've already pushed us into the 30s, east of July spread. We have a bigger carry in. We have huge stocks, pretty good amount of corn acres, 95 plus million corn acres. So I think the market's kind of adequate now. I just would say, don't get too entrenched and say, well, it's just going to be like the last 3 years. It could be, but I don't think that we should take those years and say that's the path when we're this close to farm bill payments, crop insurance payments. We should see good farm bill payments this October. And if prices stay here or lower, we should see good farm bill payments next October as well. A lot of safety nets we're falling into, and a lot of demand promises that could be ahead. So I want to be cautiously optimistic here myself.
Very interesting. Nick brings us a question. What were the main reasons we didn't see 180 plus bushel corn yield in 23 and or 24?
Yeah, good question. First thing in 23, you remember how dry Iowa was, from May all the way through May and a lot of June. And then, I think a lot of guys got surprised by the yields that they received in 23 in Iowa, because it was, rain did come at the right time and cool nights came at the right time. So, plant in the dust, bins will bust. We had a dry June and good yields in Iowa, yet we still didn't get above 180. And it really does come down to the plain states, right? Northern Plains last year did very well. A lot of South Dakota growers, Ryland, Nebraska growers, Minnesota. You just look at where all those extra stocks are. And I think a lot of people looked at the 98.8 million acres and said, there's no way we're going to be above trend line because of where these acres are located. And yet those acres did not drive down the averages as much as they would in other years. Right now, you take a weighted trend line yield, not the USDA's their yield is not necessarily trend line. Trend line is actually higher than the USDA. It is very possible that the counties that did get planted and the states that got planted will produce, a 183 to 185 crop pretty easily if they have normal weather from here on out. But it's not, you still have a lot of that growing season left, and you have a few problem areas that weighs that down. I do think it's very easy to think that maybe some inputs were skimped. Maybe we had some, denitrification issues from all this rain in some of the key growing areas. A lot of those little things add up that, a 179 print or a 178 print at the end of this year, I would not be surprised at all to see that. And the difference of what that means for carryout versus a 185, what that means for carryout is so drastic. When we have non-free market demand deals, in my opinion, because China's still going to be held to task from Trump's social media account. I think if the White House has announced that they had said 17 billion beyond the 25 million, and China's underperforming that, I think that will be called out, and those are the things we'll have to deal with for the next 12 months from the market standpoint. Is trying to interpret how important it is for them to be held to task on that.
There's a lot there, Jace. What do you think? Big weekend, historically you go into July 4th. It's interesting this year too, because obviously with Friday closed, we're going to have quite a few days before we start trading again on Sunday. So what are your thoughts as we go on the weekend?
I think Dustin nailed it. It's a lot of weather we still have to see, and this is a historically big weekend. Long weekend. Forecast looks good right now. Models don't necessarily agree out forward, and so you get a few days of different model changes going into Sunday night, Monday, with what seems to be the market trying to carve out some kind of bottom and maybe the shorts covering somewhat. Do they pile right back in if the weather, looks that's what I would guess, right? A lot of shorts are getting out going into this weekend. And they'll probably put it right back on if the models, continue to put moisture in the forecast. So we'll see. That's a huge weekend. I think Dustin's exactly right? Like last year, I was thinking about this morning because a lot of people are talking about this is going to be a repeat of last year, or it seems like it. It's hard to argue with how low we've got to this point, but not only did we get really good timely weather across the entire corn belt, all the fringe out west, everywhere to get that really good yield. We also, the bears kept getting fed, right? We kept raising corn acres on top of that, right? So it was like one thing after another that continued to pressure the corn market, all the way through August. Is that going to happen again? I guess it can, right? The USD left the door open to cut acres from here, raise acres from here. They put that as a special note right in the report that, their confidence level isn't necessarily really high on the number they gave us. So what's the takeaway to that? I don't know. There's just a lot to be still known about this crop, how many acres we planted, how it finishes. And I would argue the majority of the crop still needs to be made. It's made in July, August, September, right? It's grain fill. So much bigger of these, to get that huge 183, 185 national yield is yet to be made. And, if you're, devil's advocate to that argument is like, well, yeah, but that's more normal anyway, right? To say that we can't get that or that's unlikely, historically it is, more likely that we will continue to get rain through that time period. So I get that argument too, but I mean, look at the moves we've had, look at the volatility in the markets. I guess you got to wait and see. Yeah, I don't know what else to say about that than that, right? Big weekend, a lot to be determined. Big key technical. You look at these charts, beans are acting really good. They never even touched the 200-day, and they're, been trading back above the 100-day. Corn obviously really depressed, but kind of turn around here, right? The 20-day. I think, Ben kind of pointed that out. We traded up to it a few days ago, kind of failed, closed right at it yesterday, traded a little bit above it overnight. So we'll see maybe if we can see some strength today. I wouldn't be surprised to, push corn up. I don't know what you would say, Ben, the next technical resistance level, but you're probably looking at the 200-day in D's corn. That puts us back up at 467. Would be the next kind of place we'd test. So, hopefully we have a strong close today.
Yeah, Ben, thoughts there?
Yeah, getting above the 20-day, we had not touched that in a long time. Got through it overnight. The next little hurdle I would say is taking out last week's highs, if we could do that. And then you run into, a little bit of resistance in the high 50s and then ultimately the 200-day in the high 60s. And, I think the takeaway, and Dustin did a great job of putting this out in the yesterday in the commentary, is that when we have the acres we have, we have to work with what we know today. That 2 to 3% change in yield is the difference of being pretty tight without China or being pretty okay without China. And I think they're the wild card. If they want to come in, I think a lot of that will depend also on how things finish up in Australia. So I think the fall is going to be an interesting time unless weather stays perfect and we have this monster yield and we're just swimming in corn again. In which case we're gonna stay cheap in order to price it and move it like we did last year. But I don't see any reason next year that demand does not stay tremendous. Problems in Europe right now. We've seen some, some people willing to step off first base, and before this recent heat wave, they were talking about losing 15 bushels, and then you get into potential issues in the southern hemisphere and a world that's gotten really comfortable with two crops. And someone mentioned recency bias before that, and we've had really good crops since 23, 24, 25, 26, and in both hemispheres. So I think the possibilities here are wide open. Both can be right? We could break because everything looks good, and then we could turn around and try the upside on a pretty extreme basis if things were to finish poor and we saw business. So I just think you stay open-minded, and I don't think that you want to be tying your hands up in these markets. I historically spent a lot of my time as being a short premium trader. It's kind of my comfort zone, but I don't like looking at corn and wanting to have my hands tied between now and Thanksgiving, because I think that with all the things that we talk about, the possibilities are endless, both upside and downside. So it may not be the right thing today. It may not be the right thing tomorrow, but it only takes one or two of those things to come together, and you have a really dynamic market on the upside, or you have just a brutal, miserable period into late August, September. So you look at where all the governmental programs are at, and ECO and all of that, and you got a pretty good degree of protection to the downside. So I think balance here is just, it's not going to do what you want it to do today. And, we'll see what happens over the coming weeks and months. But I think the possibilities that corn could be a very volatile market in both directions.
Very good. Ryland, let's move quickly here over to livestock. We had cash develop yesterday. Looks like generally $3 to $5 lower, and August led the way lower for hogs. So what are your thoughts here as we start the day?
Yeah, no, I think market was definitely expecting kind of a weaker trade overall, just based on the action on the board. Seasonally, just between now and kind of August 1, the market has this kind of seasonal precedence to turn down here. And so I think you're trying to bake a lot of that in right now in the futures. We saw 230, 253 to 255 develop in the north, 255 trade in the south. So yeah, 3 to 5 lower. Also, beef prices kind of weakening up here as well. Choice down $1.90, select down $1.99. I mean, I think that if you just compare it to last year, cutout drop from 390 down to 360 just over those next 4 weeks. So I think at least we're trying to bake a little bit of that into the futures right now. I mean, you can kind of see the sentiment has changed a little bit. AgYield still a new low for the move. So we are seeing a decent amount of sell pressure really kind of stem from the front end of the market here. So maybe you're getting a little bit of that, also just kind of encouraged by the heat wave that's coming up here, maybe a little bit liquidation. But overall, I think it's just mostly that seasonal sentiment right now. So we'll see how that shapes up going into the weekend, how much is baked in, but it just feels like we're seeing the long stay on the defensive a little bit just over the next 4 weeks. And on the hog side of things, yeah, cash just could not hold gains. Cash market backed off yesterday. Just kind of felt like we were really getting something going, and sure enough, just kind of stalled out. So we had cash down 66 at 96.92. Carcass starting to hold up a little bit, but really just not that much, not enough to really get things cooking here. So Carcass at 95.71, up 22. I mean, I think overall we're finding that these larger weights are really starting to keep the pressure on the market here overall, and just feels like seasonal demand just really isn't there. I mean, typically what we see is a kind of a flat to higher cash market here, and then by kind of the end of the summer, Labor Day time frame, we really start to turn down. I mean, and the board's already picked up a lot of that. If it had kind of similar price action from last year, could lead this thing back down into the kind of mid 60s. So we'll see if that comes to fruition, if we are going to trade that kind of style or not. The board's pricing in some of it, but doesn't look like all of it right now. So maybe we're just a little bit oversold at this point, but we'll see.
Very good. Appreciate the update there, Rye. We just came into the open. Got September corn up 2 1/4 now, 4.25. August soybeans are up 7 3, up 8 now, 11.41 1/4. And September Chicago wheat's up 5.5 at 605.5. Again, just wanted to point out tomorrow markets will be closed in observance of Independence Day holiday. We'll reopen Sunday night, 7 o'clock Central. Also, link is in the description. Check out the War Room Report, access to premium content, reactions to USDA reports, and just an overall deeper dive into all the things we talk about daily here on the War Room. With additionally, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course has awarded 5 very deserving college students with significant scholarships. We'll honor those folks at our first annual golf outing here in July. So we're really excited about that. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. We, everybody at AgYield, hopes everybody has a very safe and happy 4th of July weekend. Stay safe out there. And we will be back on Monday for more War Room. Have a great weekend.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.